just a little bit of a wobbly start for the IT pack. But from the perspective of earnings, how does the quarter gone by look?
Well, yes, Alex. In fact, the IT sector has been underperforming the benchmark indices since the start of this year itself, and the reason has been threefold, really. First up, it was the fact that the margins are going to be under pressure, and the street wasn't fully factoring in the supply side issues that might happen. Thereafter, we saw the downgrades come into the sector, and that is why we have seen the underperformance. Separately, if you look at that, the valuation multiples had run up considerably last year, and with the cost of capital going up, there was a crunch when it comes to the multiples as well. And given the fact the valuations had run up, the downside risk was more exaggerated, and that's why we have seen the underperformance from the sector. As far as the Q4 expectations are concerned, well, it's a seasonally weak quarter for the IT companies. However, having said that, growth shouldn't be a problem this quarter. We have heard very strong commentary come by from the managements, and that's the reason we are expecting decent amount of growth to come by as far as top line is concerned, in context with how Q4 has been historically. But if you look at a quarter-on-quarter basis, there will definitely be a bit of moderation. For instance, for TCS itself, we had seen a 4% growth in Q3. That is not expected to be repeated. In fact, the growth rate will moderate to 2% levels this quarter. At least that is what our poll does suggest. However, the biggest challenge this quarter and the key thing to watch out for will be the margins, because that is where the street is expecting there is a big downside, and there is a possibility that the companies might report a slip in margins to the tune of anywhere between 10 to 80 basis points. And that's the reason you are seeing the underperformance in the sector today as well. For TCS, just to give you a few numbers, well, the dollar revenue is expected to jump up by 2%. However, if you look at the rupee revenue, we are expecting a number of 50,000 odd crores for the revenue to jump up by 2.5%. Margins are expected to remain flat at 25%, and the profit is expected to jump up by 1.2%. On a constant currency basis, we are looking at a growth of around 2.5%. Remember, for TCS specifically, some of the clients in Europe are ramping down, and that's the reason you are seeing some sort of limitation when it comes to the top line growth. In terms of the TCV and the deal pipeline, it will moderate quarter on quarter, but we're expecting a solid number of $8 billion when it comes to that. Lastly, in terms of TCS, watch out for management commentary for FY23 outlook, any impact of geopolitical tensions, because Europe forms almost 25-30% of their revenue contribution, and they've also announced a change in their organization structure. Will that have any impact in the reporting style, etc., is something that we'll watch out for. But as I said, it will be the margin commentary which will be crucial. When will they return to that 26 to 28% band mark? That will be the key to track. Back to you guys.
Anisha. Let's get in our experts for the day. We've got Ashish, Kyal as well as AK Prabhakar joining in. And good morning to the both of you gentlemen. I will start with the question on the fundamentals. We've just had the heads up from Anisha, and she's pointed out margins are something to watch out for. But if you were to zoom out beyond just the last quarter, Mr. Prabhakar, and what she was talking about in terms of valuations having been stretched, and the reason why these stocks have been underperforming the rest of the market as of now, what does a retail investor have to bear in mind, and should you accumulate, which names would you look at?
So no, the results are going to be anyway good, so that is never a problem, but the valuation is a problem. But there are a few valuation comfort. For example, Infosys, we expect Infosys to be better off. Now even Soft is something which is corrected, and at these levels it looks attractive. Tech Mahindra is one more stock which is looking attractive. We expect Soft and Zensar Technology to have a margin expansion. So we like both these stocks in mid-cap IT. So mid-cap IT should be the focus area for retail investor looking at 1 to 2 years. But at this point of time, everything is priced in. So you need to be slightly futuristic if you are buying IT stocks.
There's a view coming in on the IT pack saying that the results will definitely be good, but the evaluation seems to be an issue for the IT pack. But Ashish, good morning. What's your take on the IT pack? How is it looking on the charts? Do you think that there is still some more comfort in that zone?
Good morning to you and all the viewers. See, if you look at the overall Nifty IT index, CNX IT index, you can see that we are at the levels that we have seen in September 2021. So we are actually not done anything. It has been a time correction, I would say, because the levels are same. So there is not much of a price correction that we've witnessed. It's more like a time correction. And also the 200 days average comes just very near to where we stand right now. So I think we are going to consolidate for a few more weeks or months, and post that there can be an upside thrust that we can see. Infosys has already shown some kind of a sharp correction that we can see today, also 2% down, and TCS is relatively flat. So I think it's going to be a muted quarter, but the focus can be kept on the mid cap space or the small cap IT space. To name a few, maybe something like Reddington India, which is showing a very strong trend on the upside and showing a breakout happening today also with good volumes. I think investors can probably focus on those kind of stocks. And if your time horizon is somewhere around 2 years or so, then TCS and Infosys definitely are good bet from the long term perspective from the large cap space. But do not expect any kind of a magical thing to happen in this quarter. I think it's going to consolidate for some time. We are going to see some kind of a violent moves on the upside and then also on the downside, and that can be used as an opportunity to get into the stocks that you always wanted to buy.